Hello and welcome to our special Diwali programming, and this year has been like none other. Joining us to discuss all the highs and lows of the year gone by and what to look forward to this Samvat, we have our expert panel, Navneet Munot, Bala and Balasubramaniam. As always, gentlemen, fabulous to have you with us, and it's really great to have your expert perspective as we head into what could be, in fact, a fresh wave, a fresh bull run, so to speak, given the inflection point that we're currently standing on. So let me start off with you, Navneet. How would you sum up the kind of challenges and the kind of victories that we've had over this year with the pandemic, with the sharp fall that we earlier saw in the markets in March, and then the recovery that followed?
Thank you, Abha, and wish you and all your viewers a very happy Diwali, and I wish everyone a very healthy and a blissful year ahead. This has been an extraordinary year. The number of times we heard the word unprecedented, that itself has been unprecedented. Because we saw an extraordinary health crisis, we saw an extraordinary economic crisis, the kind of challenges that humanity has faced. But the best part is that ultimately you have to give it to the human ingenuity that we seem to be winning not only the war against COVID with the vaccine announcement, and I think in India there seems to be the herd immunity seems to be getting developed. I'm not a medical expert, but it looks like the way numbers are moderating, we are winning the war against COVID. And of course, I'm really confident that we are going to win the war against the economic slowdown as well. And I think with the policy stimulus that has come globally as well as in India, including the structural reforms, over the next several years, we can expect a sustainable, good quality growth coming back, both in the economic growth as well as in corporate profitability. So I'll sum it up like that. And of course, we can discuss several of these aspects more in detail a little later.
Absolutely. Bala, let me bring you in, and I think it's wonderful that we're having this chat on the back of what's been a good year in terms of returns by the end of it, and also just as we're hearing news about the vaccine, the Pfizer vaccine in particular, being almost 90% successful and looking to perhaps hit users by the end of the year. So it's really giving that much needed fillip to sentiment as well going forward.
Yeah, I think, first of all, thanks, Abha, for having me on the Diwali special show. And I take this opportunity to wish each one of you, and as well as the entire viewers, happy Diwali and a great year ahead. Clearly, as Navneet mentioned, 6 months, of course, have passed quite smoothly. And as we get into the festive season, of course, one US election result completely setting the ball rolling for the future, different from what we have seen in the past. And definitely the vaccine and the news which has been announced by Pfizer, which of course is capable of scoring about 90% probability is high, which again means it is good news to the entire COVID issue that we have seen. And it's been the long waiting to find some kind of solution. While one can argue that immunity during this period, the last 6, 7 months, 9 months, the immunity system also would have gone up. And the arrival of vaccinations at this point of time is very, very timely. And a much awaited good news is coming in, coinciding with the festive season. It's also coinciding with the effort that has been put by the government across the world as well as in India to revive the economic growth at the next level. So therefore, I see all these things leading to us to believe that that good days would be back to normal. It's only a question of time of a few months here and there. So therefore, I would probably say that this festive season is coming at the time where the other news, good news also is now falling in place.
Vetri, let me get your view on the year ahead, what you're looking forward to most, whether it be structural reforms, whether it be stimulus, a fiscal stimulus to drive demand, and something that everyone's still been waiting for.
Well, Abba, I don't think it's one or the other. Obviously, I think both need to be done. I think we've seen some excellent supply side measures in agriculture, the changes in the labor code, and also the production linked incentives, which should hopefully enable India to participate in global supply chains. But the fact of the matter is that the recovery in the economy has not been equal, it has not been even, and there are many industries, many people who've been left out. And I think, therefore, there is still a crying need for both targeted humanitarian assistance to individuals as well as to industries by way of perhaps some kind of fiscal stimulus to sort of ensure that everybody gets the sort of velocity and escape trajectory to break free of the COVID-related challenges that we faced this year.
A lot of good news this Diwali, and that always makes us happy and makes the markets happy as well. Now, you've both touched upon structural reforms, so let me dive into that. Navneet, let me come to you first on this, because given that we're also now a few months away from the budget, but we've been hearing on policy from the government at fairly regular intervals through this time. What is it that you're now anticipating or looking forward to? What do you feel could be a critical step in order for us to really see the next leap in terms of a recovery?
Sure. So I think, as I mentioned earlier, that last few months during this crisis, we have not lost an opportunity of continuing on the path of structural reforms, whether it's the agricultural reform, whether it's the labor reform, whether it's a reform to boost manufacturing in India, new education policies, so on and so forth, have been very, very encouraging, and they will have far-reaching positive implications. Building on all the other reforms that have happened over the 5-7 years, including the GST, financial inclusion, digitalization, so on and so forth. I think the need of the hour is to also pursue financial sector reforms. Finance is the lifeblood of the economy, and I hope over the next few months we start focusing on financial sector reforms. How do we ensure that we improve the absorption capacity of the global savings and also boost savings in India and channelize those savings into the productive assets? Ensure that our financial system has the capacity, financial system has the depth, markets are robust, to ensure that our savings are channelized into the productive assets, and as our supply of risk capital, because to reach our target of $5 trillion economy, that would be one of the most critical. By and large, I would say a large part of the legislative reform agenda is behind us. What we need to focus going forward is on administrative, judicial reforms. I think pace of execution, creating infrastructure, focusing on sanctity of contract, so on and so forth. And I think going forward, if we do well on these counts, I have no doubt in my mind that this could be one of the best few years ahead of India.
Bala, what to you would then be a priority as we look forward? And given that we have been anticipating a catch-up on the financials, a huge basket, of course, and a huge priority also on the back of some of these reforms that are expected to come in.
I think clearly, as Navneet mentioned about all such reforms, what he highlighted, I think would be the need of the hours. There's absolutely no question on that, especially in the financial market. Definitely money being the bloodline of the financial market, the credit market to come back, one need to, of course, create some kind of a demand push. So therefore, I would assume the government may undertake a few steps to boost the demand, given the fact that the rural economy is doing relatively better. Agriculture economy this time around has done a little better than the last year because of good monsoon. But definitely some bit of push which comes to boost up the demand, either in the form of government spending or in the form of making goods relatively cheaper, so that the consumption can happen, especially when the interest rates are low. And second is, there's one of the sectors which, of course, can create huge amount of employment, as well as provide the necessary flip both to the exchequer as well as GDP growth, which is in the auto sectors. There has been some kind of pending policy around the scrapping policy. It's been long pending, and therefore it could be a good time to actually revisit that and push forward with respect to that sector to get boosted the form of demand coming back. And the government itself has been a great big spender, and any good divestment that happens, I think will boost their own energy as well as the direction to raise more money so that they'll be able to actually attract foreign money into the certain sectors, and that can come as a good confidence booster for both the government as well as the ability to spend as we move forward aggressively. I think the single point will still remain. In my view, the government has done a big justice on their fiscal reforms they did during the COVID period, which is nothing but giving a guarantee for all the loans that is being provided to the MSMEs and SMEs. That is nothing but boosting the confidence of the lender, which is the most need of the hours. But as that becomes as a practice for the lenders to start lending actually to the market on a continuous basis, then the cycle will come back, then they'll probably get into the natural spiraling in order to push the economy to the next level. So I would assume bringing back the confidence, they've done a great job in the last 9 months, probably continuing to do the same thing going forward and giving a boost to the specific 1 or 2 sectors can actually do the necessary impact to revive the economic growth.
Vetri, while we've talked a lot about the polarization in the market, and there have also been individual names that have really stood out in these last few months, do you think it's now going to be about the financials, for instance, on the back of that recovery hope or the expectation that we will now see a consistent recovery going forward?
Sure. I think the one point that I would make, and I keep repeating this, is that the stock market is not a normal distribution. So I think people who look for equality in terms of outcomes, you're coming to the wrong place. Capitalism is a winner-take-all model. Benefits do accrue disproportionately to stronger companies, and therefore you have to take that as a granted rather than continuously argue for equal participation by all companies at the same point of time. There will be different phases of the cycle where some companies might outperform, some sectors might outperform. I think that's just par for the course, and one should not look for all outcomes to be equal. That's more of a socialist mindset rather than really how capitalism and the stock markets work. I think at this point of time, it's really advantage formal, large, listed companies, because there's been a significant supply side disruption, there's lesser competition, and there are market share gains accruing to larger companies that have been able to put their supply chains back in place, both on the manufacturing side as well as in terms of getting the products across to customers. So I think it's really a scenario where rather than look at companies or rather than look at sectors, it's a question of identifying which are those companies that can benefit from the kind of challenges that COVID has posed. And my sense is that it is the stronger as well as the leaner and fitter companies which come out of this and grow twice as fast as perhaps what their underlying industries itself will grow. And of course, this is going to happen even in areas like financials, where given the recovery in the economy has perhaps been much better than what our worst fears were 6 months ago. There is a case for greater consolidation in financials, with certain institutions benefiting disproportionately as compared to the others.
As we head into the new year, Bala, and given the kind of tumult and the twists and turns that we've really seen over the past year, how would you advise somebody to really build an ideal portfolio going forward, keeping in mind some of what we spoke about, keeping in mind some of the new themes that may emerge, the industrials or the financials that might pick up from here on? What would you say is really an ideal way to look at the market right now?
I think clearly from an investor's point of view, asset allocation will continue to play a bigger role. And I mean, asset allocation is a good mix of equity, a good mix of fixed income schemes, and also some bit of gold as part of the asset allocations. I think will remain as a broad principle in which every investor has to make their investment. And in terms of going overweight or underweight, depending upon what the kind of risk that the individual is willing to take, and second, what are the alternate investment that they have in front of them before they making any kind of investment decisions. So naturally, interest will play a role. I think your own consideration of buying a real estate with respect to the rental income will play a role. And ultimately, what is that is going to give me a longer term wealth. And given the fact that interest rates are so low and rental incomes are so low, naturally it comes actually the equity. And within the equity space, while we will, of course, money managers, fund houses like us will continue to offer a variety of product for the investors to choose. At the end of the day, investors cannot move away from their core portfolio point of view, which is considering investing in a diversified equity portfolio, which has got some kind of flexibility for money managers to choose where he can make money. At the same time, the thematic funds such as banking and financial services fund or IT fund or even ESG kind of funds, since they come with a specific theme, keeping in mind the longer term sustainability of generating return for the shareholder, to the unit holders is something will remain one of the key area of focus for them to select. So it comes as a part of the diversification. Therefore, the overall diversification between equity and debt has to be maintained. And within that, investors can diversify, as I mentioned earlier, between multi-cap and some of the thematic funds in order to ensure that they are able to capture on one side the theme, that sustainable theme. At the same time, they're able to actually stay with the fund for the longer term consideration rather than looking at the short term consideration.
Okay, lovely. Navneet, let me get you in on this as well. You know, the way you would break it up in terms of asset classes or classification of funds, what you feel is perhaps the, the best way or, the most ideal way really to go into the new year.
So as I mentioned earlier that I think we believe that we are going to see a global reflation with R. We have been in a long period of global deflation where growth and inflation have been below trend. I think we are going to see a reversal of that, which should be a tailwind for India. We are going to see a long sustained recovery driven by all the structural reforms as well as supported by global liquidity and the domestic liquidity, lower interest rate, lower corporate tax rate, and it should be a lot more broad-based recovery. As Bala mentioned earlier, that we have seen a huge polarization in the profit pool as well as in the market cap for companies that have higher growth as well as on the right side of technological disruptions. As growth and profit pool becomes larger, shared by larger set of players, we should see a lot more broad-based rally going forward. And I expect a sustained longer-term growth. Of course, I mean, we have to keep a watch on the evolving COVID situation. And again, I repeat, we hope that we see one more round of fiscal stimulus, which can really kickstart this engine, because engine is very much in place for a sustained recovery in economic growth as well as corporate earnings for the next several years.
I think what you said about an uneven market is particularly relevant, Vetri, and I want to get your perspective on that in terms of an expectation on returns going forward. While we've seen exponential returns in certain pockets of the market, overall and on the index perhaps, or should investors be looking at, certain themes or classes, for example, multi-caps or mid-caps going forward, what would you recommend would be, perhaps a safer way to look at investment scenarios going forward with, with a decent average return expectation?
Perfect. Let me answer that in two different ways. I think given the new construct of the Indian economy, where you've got a inflation targeting monetary policy committee looking at 4% inflation, you give a little bit of a markup of that for the risk-free rate, maybe anywhere between 5.5% to 6%. So really we are operating in an environment where from an asset allocation perspective, you need to look at equities as 11 to 12% asset class. That's the kind of returns you can expect from the asset class over the medium to long term. It's not a 15% or 20% return asset class. So that's point number one. Point number two, Abba, I would actually say, is that we spend too much time trying to think about which particular subsegment of equities, be it mid caps or be it small caps, or a particular theme or a particular sector will do far better in the next 6 months or 1 year. And I think people would be served far better if they actually thought about their portfolio more from a asset allocation perspective and thinking about how much equity allocation we have, rather than trying to sweat exactly which subcomponent of equity that they need to have exposure to. I would broadly recommend that in the current SEBI framework, the multi-cap funds which invest across large, mid, and small are very attractive. Of course, as you're also aware, SEBI has now given a new template. So maybe the preferred category going ahead would be in that flexi-cap category, because those portfolios would have exposure across the market cap spectrum. But I would say most investors would be better served by getting that asset allocation decision right in terms of equity allocation, rather than continuously trying to rebalance for what will be the next best performer for the next 6 months or 12 months.
Just as we wind up, and I know that you may not want to discuss individual stocks, but Bala, any themes or ideas or maybe clues you want to leave us with? There have been certain pockets of the market, as Navneet mentioned, even in the broader markets, that have stood out. We've seen stocks that have made a comeback. We've seen a whole fresh round of IPOs, for example. There's now talk about some of those really beaten down themes like travel, airlines coming back, hospitality, perhaps. Anything that you feel one should just keep an eye on as we head into the new year?
I think broadly, I think one should probably increase the expectations. And given the fact we have seen last 9 months of suffering on COVID, and now things are coming back, then naturally one can expect as a pent-up demand to come back, and therefore see a broader recovery. From the investor's point of view, rather than focusing on sectors, there's one of the segments generally considered as a risky, and which is the small and mid-cap or mid-cap space. And given the fact that they do go through a pain period when things are not working and the broad economy as it's generally expected, and given the fact we are seeing some kind of recovery and broad-based market recovery could come, rather than focusing on sectors, probably it could be worthwhile focusing on a mid and small cap segment. If somebody has got a time period of more than 5-year period, and given the fact that we'll probably see the earnings starts coming back for most of the companies supported by the growth recovery rates, we will probably see the broader market providing greater opportunity for money managers go and look for ideas and opportunities and own them in the portfolio. Therefore, look at generating better return for the both the unit holders as well as shareholders.
Navneet, your closing comments. Do you anticipate any near-term profit booking, slight apprehensiveness perhaps, or do you feel that's all behind us and it's only moving forward from here and investors should just continue to build up positions?
So, equity markets never move in a straight line fashion. There would always be correction even in a long-term bull market. We must be prepared for that. We must be prepared for volatility on account of any news flow from global market or maybe any domestic development. Having said that, without repeating all the other factors that I mentioned earlier, I believe that it could be a long sustained cycle of economic growth as well as revival in corporate profitability. In fact, one more factor that can add is, I think, a revival in the real estate sector, particularly in the residential real estate, which is a large job creator and has a multiplier effect. We expect a recovery in that as well. So I think looking at all of those, a stronger corporate balance sheet, relatively better shape financial sector balance sheet, and I think companies with, if I have to put it in a thematic way, I would say that it has been a narrow set of stocks or themes that have done well, as we discussed earlier. As growth becomes more broad-based, companies with higher operating leverage or even a moderate financial leverage would be the ones one should look at, because in an environment growth was scarce and money was very cheap. You were looking at few of those growth stocks where you could a discount of cash flows far from future and they were still valuable. Now as growth becomes more broad-based, I would say that expand your investment universe and there would be many ideas across sectors. In fact, some of the sectors that have been badly impacted by the COVID crisis, they would see a lot more creative destruction. They would see a lot more consolidation, and the winners with the resilience and who have invested rightly, who have innovated rightly, I think they would come out a lot more stronger. World is coming back to normalcy. We will go back to a similar kind of world where we were. And I think some of those companies would be a big beneficiary of the steps that they have taken.
Gentlemen, thank you so much. It's always so wonderful to speak with both of you and get your unique perspective on where we stand and how things are likely to evolve going forward. I'd like to wish you both a very happy Diwali on behalf of the entire team here at ET Now.